GoFX, what's popping? So, want to break down last week and how last week went, what I was able to do. So, last week, last week I was able to call it 8% on Sunday. Okay, that was wild for me. Doesn't usually happen, but it happened, and I called out 4 trades on Sunday. Okay, so I called out. Where's it start? It starts right here. Okay, I called out sales on CAD CHF. Target was stop loss should have been a little bit smaller. I'm not gonna lie, but target was a 1-to-1. Called out trades on NU again. Stop loss could have been smaller, but all good. Doesn't really matter. Called out 1-to-1. Called out buys on GN. Stop loss was at the low. Target a 1-to-1. And then we called out. Oh, what was the other one? We called out. This one. Called out buys on CHF JPY. We'll be buying when price gets to this level. Buy limit right here. Stop loss below low. Target a 1-to-1. All 4 of those TPs hit. All 4 of them. So that was 8% on a Sunday. And then eventually I called this out on EN. I called out buys on AU. AU got stopped out. The EN buys did play out. That was very, very easy. And for the total week, we got 1, 2, 3, 4, 5 wins, 1 loss, 8% total, right? So now that was very, very good this week so far. I called out NU sells, CAD CHF sells, and NJ sells so far. We are in a little bit of profit, all of those. But so far, I have been. Oh, actually, matter of fact, I just got the alert that NJ hit TP right now. Let's go check that out real quick. So, oh yeah, it just did right now. Nice. So yeah, just hit TP. Very, very, very good. Sending out to the chat. But yeah, I have been experimenting with this a lot recently, and I want to break it down and tell you why I think it's so powerful. Okay? I want to break it down and tell you why I think that this way of trading is so powerful. Because okay. So TP hit on NJ, cool, 2% for the week already. We could be done. Probably will put NU at break even and hold CAD CHF. But the reason why I think this is so powerful is I'm going to show you guys what I've been doing lately, how I've been trading, and I'm going to go and I'm going to do this. First of all, I used to, if you go back through all of the trades and all the videos that I've taken and the trades on the Telegram, I used to trade a lot different, trade a lot more complicated. Imagine if you came to a chart and this is all you did. Okay, we're going to break down the process right now, A to Z. Go to a chart, go to the weekly. Where is price going? If price does not have a clear direction of where it's going, you go on to the next pair, right? This has a clear direction. It's clearly going up. Okay, let's go to the 4 hour. Right? Let's go to the 4 hour. All right. Now, since it's clearly going one direction, we want to look for trades that go that direction. So we want to look for buys. Okay, we found a level of support that we can take our break and retest trades off of. Now we're going to put a buy limit there. Okay, buy limit there. Stop loss is going to be at the previous low, probably be a little bit higher because it's so big. We're going to target a 1-to-1, and we're done. Now imagine that 10 to 15 seconds that it took to mark up this trade, right? Imagine this. You are done for the week. TP hits and you're done for the week. Imagine that. You don't have to do anything else. The process is very, very, very simplistic. Actually, I have it already marked up on one of these pairs, 80 CAD. Process is very, very, very simplistic. Okay, what I do is 2 things. I look for the trend. I see where price is going. Is it going up or is it going down? Depending on if it's going up or down. If it's going up, I'm going to be looking for buys. I'm going to be looking for buys at support levels, which were previously resistance levels, break and retest trades. And I'm going to use limits. I'm going to put buy limits or sell them if it's going down. put buy limits, my entry is going to be on the level. My limit is going to be set on the level, usually on the bodies of the candles because it just for some reason seems to work better like that. Stop loss is going to be at the previous low. If price is like it's really really big, I'll have it halfway down or whatever. Doesn't really matter. Usually it's going to be right at the previous low. When target a 1-to-1, if it's possible to go farther, 1-to-1.5, 1-to-2, I will do it, but it's not always every single time. And that's it. That's the entire process. Trend, support resistance, limits. The reason why I believe limits is better is because they have better entries. Stop losses are going to be safer. And you don't have to sit there and wait for candle confirmations, right? Now, by safer stop losses, I mean that your entries are going to be on the level. So your stop losses are going to be at a level, a spot where you don't have to, like if you are going to use a candle confirmation, you'll probably enter up here. And if you're going to target the same area, right, a reasonable TP, you're not going to try and extend the TP just to hit a risk reward. That means that you're going to try and have your stop loss in a spot where it's a lot more vulnerable to hit that risk reward. But if you have a buy limit or a sell limit, your entry is going to be a lot lower. So your stop loss can be in a much safer area and you'll still have a reasonable TP at the same time. Your entries are going to be better. Stop losses are going to be safer. You don't have to sit there on the 15-minute or the 5-minute or the 1 hour or whatever it is and look every 15 minutes, 5 minutes to get a candle confirmation. Save a lot of time. Now, the reason for the risk reward, I think I broke this down before, is that 1-on-1s get hit a lot more often. And at the same time, you don't have to exaggerate your TPs. You don't have to try and get sniper entries. You don't have to try and make your stop losses super small, right? It allows you to have realistic TPs, a realistic entry, and a realistic stop loss. It allows you to be in a spot where I don't have to force my stop losses to be super small just so I can get a risk reward, 1-to-3, 1-to-4, 1-to-5, right? If this is going to be a realistic TP, the next level, like it would be for me, I'm going to target that with a 1-to-1. I'm not going to have a safe stop loss. But what I used to do is when I use buy limits, when I use candle confirmations, all of it, what I did is I would have my stop. I would have that target. I would have my entry, but I would have a super small stop loss just to hit that risk reward. So I would get stopped out all the time. Now, at the end of the day, on paper, what's going to happen is it's probably going to add up to be around the same. These guys, the 1-to-1s, are probably going to be around 90% accurate because it's kind of hard to lose when you trade like this. The 1-to-3s are probably going to be around 10 and 20% accurate, okay? But since their risk reward is so much higher, they're probably going to end up making around the same amount that we make on paper, okay? That's on paper. In real life, there's something called psychology. And if one trader, me, is taking these trades and I'm winning 90% of the time, every 9 out of 10 trades I win, my psychology is going to be a million times better. Less anxiety, less stress, more confidence. This guy is not going to have any of that because he loses so much. Even if it's going to, on paper, end up to be the same, it makes a huge difference when you win 2 out of 10 trades versus 9 out of 10 trades, okay? So that's why I think 1-to-1s, 1-to-2s are better. I'm not saying you have to do a 1-to-1, but a 1-to-2 is better than a 1-to-3, 1-to-4, 1-to-5, in my opinion. And it just works better. So right now, this week, I have called out trades sales on NJ, which just hit right now, okay? Now, the reason is, okay, and I know this is going against what I just preached, okay? I get that part. The reason why I did it is because on the 4-hour, what happened is we had resistance, and our price was coming up for a third touch on the resistance. The reason why I took these sells is I will only take sells against the trend when price is about to have a third or fourth touch on a level, rejecting it. Like if price is going bullish, I will sell if it's the third or fourth touch on a resistance like this, or vice versa, third or fourth touch on a support if I'm looking to buy. Only if that, and only if there's divergence. So you can see from here to here, we were at the same level. But on the RSI, we were below. Here to here, look how different that was, right? So the third touch, we have a solidified resistance and we have divergence. I'm taking those sells, okay? So that's that. And you, same thing, or not the same thing at all, actually. Overall, in the daily, we are in this really weird spot but we are going down. Lower low, lower high, lower low, lower high, and now we're pushing down. We're in this sort of bearish channel on the 4 hour. Came up to this level. I entered late, actually. That's why my entry was high. My entry would have been down here, but we entered late. Stop loss is 20, TP is 20, and we're gonna hold that. Looks like it's rejecting it pretty nice. And then the other one is on CAD CHF. Okay, CAD CHF. This is a good one. On the weekly, completely bearish. We are in this bullish retracement channel coming back up. We have 1, 2, 3 touches as support. 1, 2, 3, 4, 5, now 6 touches as resistance. So I just sold, right? When market opened, I already had this planned. I sold. Take profit is above the high. TP is there. That's it, right? Simplistic. Now imagine, again, you take 10 to 15 seconds out of your day, go to the weekly, it's bearish. Go to the daily, you see a clear view of the level. Go to the 4 hour. I'm just gonna put a settlement right there. Okay, cool. Let's do that. Right. That's it. That's all it is. It's a simplistic approach. It's not a 10-step program to get a trade. It's not taking 30 minutes on a chart. It's 10 to 15 seconds. And in my opinion, if you're going anywhere above 30 seconds to break down a chart, I think you might be doing a little bit too much. If it works for you, that's completely fine. I'm not saying this way that I trade is a holy grail and this is the only way to trade. I'm saying that for me, this has given me so far the best results, and it's the least anxiety, least stressful way that I've traded so far. And I've gained more confidence doing this than I have doing something else. So I would say this works, and if you are struggling trading, I would say just try a very simplistic approach. Just try it. Just go to a demo account and just test it out for a week or two. Test it out and see, well, what happens if I go with the trend and I just buy at support and I sell at resistance? What happens if I do that? And I have a big stop loss and I target a 1-to-1. What happens if I go against the grain of what everybody else says, where you have to have sniper entries and you have to have good risk rewards and you have to have all these tight stop losses and tight entries? What if I just go against it and I just try to do this? This will make a big difference. That's it. OFX out.